Hey, welcome YouTube. My name is Hossein. You're here to know about stocks. Fantastic. What are stocks? So by purchasing a stock, a share of a company, you are buying a portion of that company that you're invested in. Now, stocks can pay you two ways. Now, one of the advantages of investing in stocks is the stock will work for you 24/7, whereas your money in the savings account appreciates only about 0.5% annually on return basis. The stock market on average appreciates about 10% annually. Now, in fact, this has been happening since 1974. So you see the benefit right there. The key form is here to remember you have to be in the stock market for long term. Stocks pay you in two forms, dividends and the payouts when you sell them. Dividends are the money that the company pays you on regular basis, usually on quarterly basis, as a cash or additional stocks. Now, another way is by sitting on the stock and cashing out or selling when the price has appreciated. So you purchase it at whatever price you purchase, sit on it for a duration. Usually the longer is the better. And when you sell it, you get the difference. This is a simple formula. Number one, you have to have patience. It's not gonna turn overnight. So you wanna sit in the stock market long-term basis for years, preferably minimum 5 years. Or 10 years. Number two, you have to invest in the right companies. So you have to do your research, you have to do your homework and find those companies that you see a future in them, you see them growing in 10, 20, 30 years. You know, your major companies, your tech sector, your Apple, Microsoft, Facebook, etc., etc. Do your research. You want to invest in solid companies where you think they will be around for many, many years to come. The sooner you begin investing in the stock market, the better you are off. If you invest $2,000 by your 20s, it can turn into $100,000 by the age of 40. Thanks to compounding interest at 10% annual return. So you see how easy it is to turn your small investment into something significant. As a matter of fact, that 10% average return can turn into incredible savings thanks to compounding. Now imagine someone tells you you can turn $2,000 into $100,000 with little to no work. That sounds almost like too good to be true, but it is possible if you're invested in the right company. The key element to remember here is time. The longer you are waiting, the better. The more your money is working for you, the more powerful compounding becomes. Now that means you want to start investing as early as possible, in your 20s perhaps. Therefore, you will be having a greater returns by the time that you are 40. Keep adding to that $100. And remember, the compounding is working for you, right? You will be amazed how quickly your money grows. As a matter of fact, if you add just $100 on monthly basis to your initial $2,000 investment, by the time that you're 40, you will be having $1 million in your investment portfolio account. Now, keep in mind you have both winners and losers. The key is to invest in the right companies, into solid companies that you see they're not going to go nowhere but grow. So the biggest advantage you can give yourself is to start investing early and you'll get there. Remember, the key is to retire a millionaire. Thanks for watching. Remember to subscribe, leave me comments, ask me your questions. What are your concerns about stock market? Why are you hesitant? What do you like about it and what do you don't like about it? Subscribe. See you in the next video.